is Ofer Vicus. I'm the co-founder and CEO of Aduro Clean Technologies. Thank you, Matt, for having me. I'm joined here by Eric Appelman, our CRO, who will introduce himself. Basically, Aduro is a chemical technology platform that basically take a material that has low value and increased its value with a very unique chemical activity that we're doing. Aduru has a very large potential market. We are dealing with heavy oil. We're dealing with waste plastic. We're dealing with other applications that we're now testing, such as rubber tires, and has a very large addressable market. Because of that, it's a very novel technology with very, I'd say just very novel technology. Eric, would you introduce yourself?
Yeah, very briefly. My name is Eric Appelman. I'm a Dutch national chemical engineer by training. I have 35 years of experience in the chemical industry under my belt in technical, commercial, and executive roles. I came across Aduro about 2.5 years ago when they were applying to become a member of an innovation campus that I was a director of and for which I had to recruit innovative companies. I was very impressed by their talk to an extent that 2 years later, when it was time for my regular change, I gave them a buzz and the rest is history.
Eric, was he impressed by my talk or the general talk? Yeah. I'm joking. No, it's okay.
Must be this. Right, guys, let's talk about that. I haven't seen you for over a year. Obviously, things are good. You're up 30% in terms of share price. People are paying attention for sure. I want to understand where you're at. And I guess for people new to this story, it might be worth explaining the problem that you're trying to solve with your technology.
Okay. In short, Matt, the problem is that many of the, I'll say, industries that we are dealing with has some kind of a limitation. They have to deal with some kind of a chemical or economical limitation. That is because the current technologies that are, those industries are using somewhat are late in legacy, and the core of them, that they are really has some issues. Now, not to say that they are not good, and not to say that has not been development. There's a lot of development in this. But if you take our approach, basically jump and skip some of those limitations, which in effect give us a new way to address those sectors. And therefore, the technology has some benefits that basically allow us to reimagine how we address those market. And that gave us an edge because we can do things in a smaller scale. We're doing things with lesser temperature. We are having higher tolerance to contaminations. We can think about building solutions to a specific scenario. We have much variety of toolbox, a bigger toolbox than other has, and that gives us a conceptual business model.
Right. Okay. But that's a bit generic. I need to kind of get into if you're looking at recycling plastic waste or upgrading heavy crude oils or right. Sustainable fuels and chemicals, in terms of converting renewables.
Right.
That is the revenue streams and the businesses that you're addressing. Why is your product any better than what else is out there? You've got this
maybe we'll let Eric speak to that slide, which will give you some description of that.
Let me start a bit on the financial end. Most people think that when they are using a waste stream or a cheap stream, that they have it for free. Now, that might be true in some occasions, but there will always be things that you have to do it. And for instance, the better quality of plastic wastes these days costs actually money. Because people can use them in a different way, mechanical recycling, for instance. So, and on the other hand, we are in the business of making chemical feedstocks, and whereas at this moment you pay some handsome premium for circular feedstocks, for the long run where we are working for, you probably have to assume that you're going to end up in a price level that is similar to what naphtha is today, crude oil distillate. And that means that we have about $600-700 of margin to play with. Now, if you now look at the more established chemical recycling technologies, you must draw the conclusion that they're way too expensive. Because on the first hand, they have to be very picky on what they take in. They have to reject stuff. And if you reject something, you are incurring cost because you have to get rid of it. And then we do that process, which takes typically quite a bit of energy and also burns quite a percentage of what you had to put in. And then after that, you're having an oil that you do need to do considerable after treatments on. I'll save you the details there. And that whole thing that I'm just trying to describe is just not going to cut it cost-wise. What we do is our technology is a lot more forgiving to what you put into that. If you have contaminants in there, we'll deal with it. And you do not have to sort them out beforehand. Then we do a process that requires much less energy and generates a lot less useless debris. And then the product that you get out of that will require considerably less or even no after treatment at all. And this is what is going to bring this molecular recycling or chemical recycling or advanced recycling into the domain of financial viability.
So Matt, just to visualize it to our investors, we basically can build smaller, cheaper unit that can do higher value of product. It's less pickier. So we have more options to deal with solution rather than just to normalize something that is already there. And often the technologies that we are maybe competing with has this limitation. They have to build centralized large location with all kind of incurring costs associated with that.
Okay, so you've got a technology which you're talking, it works across a number of verticals, a number of revenue streams, right?
Yes.
And some are going to be more profitable than others. So what are you focusing on?
Oh, we have started with the bitumen, where we came from the bitumen place where we discovered, this is how we discovered the unique chemical process that we are now controlling and owning patents around the process that we built. And we very quickly moved from that to test technology on renewable oils. And lessons learned from one to the other led us to believe that we can address different sectors. And the one that is much more aggressive, basically, is the waste plastic. It's very, very big plastic, segmented, with lots of options. And we are definitely advancing in that sector. And our secondary right now is the bitumen sectors, and the rest of the sectors are, in somewhat of a development stage, I'll say.
Right. Okay. And then I think the difficulty with new technologies is there's always incumbents, and they are already, providing solutions. They may not be as good as you feel your product is, but it is a barrier. Because people, the clients, the customer at the end of the day is going to have to change their process, and that costs them money and time, etc. So in terms of the existing market versus how much of that do you think is achievable by you? I mean, what are you aiming for, and how's that process work?
If we are talking about this key plastic recycling market, people have been sitting on the fence, and with people, I mean the big petrochemical houses who are the ones that have to find a source of circular feedstock. And that is because these pyrolysis plants, well, they're expensive, they're complicated, but also because regulations have been slow to develop. And as a consequence, you are now starting to see the first investment projects to make these pyrolysis plants, and they're just one here, one there, one everywhere. And of course, if somebody announces 20,000 tons or 40,000 tons capacity, that is very sizable. But on the total scale of naphtha in the world, which is in the multiple hundred millions of tons, it's just a drop in the ocean. So as a matter of fact, even though we have been a little bit later to start, because many of those people started already around 2005, when, believe it or not, we were all afraid that there wouldn't be enough fossil carbon, we are pretty much sort of in a similar time frame. It is at this moment in time that these large petrochemical companies are starting to make their first foray into plastic waste chemical recycling. And you can just troll the internet and you'll just find that indeed the announcements are now coming, one here, one there, one everywhere.
And Matt, I'd like to stress there that those technologies are basically or share in most of the time the same DNA, the same code. And so for that reason, they behave very much the same. And so there's a lot of history behind those technologies. And within time, they are facing more and more and more issues concerning costs, because you have to collect the things, you have to sort the things, you have to invest in some kind of hydrogenation. There's all kind of things that we solve, and they still have to basically face those challenges.
Actually, it might be worth explaining the difference between urochemolysis versus pyrolysis and thermolysis in terms of the technology itself. Might be helpful. If you don't mind.
Eric, would you tell?
Okay, I might become a little bit chemical, but I will try. If you normally,
we are on.
So what you do if you apply pyrolysis, it essentially you are using the brute force of temperature. You just crank it up, and at high enough temperatures, your plastic molecules, which are very large molecules, they will break up to pieces. And while they are breaking up, and this is just chemical law, you will form what you call an unsaturated bond. I can immediately forget what it is, but what is important to know that for further chemical processing, that is undesirable. And as a consequence, you will have to do a step which is called hydrogenation in a separate plant with separate capex and with considerable operational cost to rectify that issue. And then, of course, also your plastics are rarely pure. So maybe somebody forgot his PET bottle in there, and that is in there. Now, you have to understand that when you have PET in like a big pile of plastic bags, it will leave some atoms in there that you do not want either into your chemical feedstock. And for that, you need yet another post-treatment. Now, our process avoids both. It avoids this unsaturation because we have a clever trick to deal with it in the very same pot where we break up our molecules. So what comes out of it doesn't need any post-treatment. And these undesirable atoms that I just talked about, these molecules are also broken up, and then the undesirable atoms will naturally separate because of polarity difference, and you can just take them off very, very conveniently. So the product that we are getting out of our reactor is something that doesn't need to be treated for those two major problems. It also means then that, I was talking about person leaving one PET bottle in there. Well, if there's actually 2 or 3 PET bottles, we can live with it. So you do not have to go out of your way to try and get also the last sliver of PET out of your feedstock. And that saves a lot on the pre-sorting and also on the rejects that you may generate in that pre-sorting. So those are 2 extremely important differences. Now, the other thing that these very high temperature processes in pyrolysis do is, it is like when you're cooking at home and you put the fire too high, you will make char. The thing will bake, or I don't know what the English word is, but you will have a big layer of black stuff on the bottom of your pan. Well, that is also what is happening if you do that pyrolysis process. You do make a little bit of carbon black. And people have done a magnificent job to minimize that. But it is a loss. It does happen. And for us, because we are operating at a lower temperature, we do not see that. Now, and finally, lower temperature, you already heard it. It means you have to heat less. And if you have to heat less, it means that you do not have to burn something. You do not make any fossil emissions while burning something. And anyway, it's going to be a lower operational cost.
Okay, Ofer, I hear what you're saying. You're talking about, but you use the phrase our plants. Now, it's not our plants because you've got a licensing model, kind of keep that kind of CapEx requirement down. So tell me about the kind of commercial plans that you have when it comes to licensing.
So we at Math are doing basically 100% licensing, which means that we will provide technology package to our customers, basically. That's our main goal, and that is the most easiest thing. And so we, are developing this right now. We're in the commercial journey where we're developing this package and doing the economic models and doing everything associated with that. But we are also open to different business model as we see fit in that sense. So just repeat back again the question and tell me, which side is more important to you, and we will try to answer.
Okay, well, I guess where I'm heading is I'm trying to understand how to value you as a company. That's what I'm actually after, because I need to understand in terms of these licensing models, there's 101 ways you can do it, as you're indicating there. Okay, so if I may, can you sort of maybe talk us through what a sort of typical licensing model could look like for something like this?
You know what? Maybe Eric will talk a little bit about the licensing model. Then I'll come back to speak how to evaluate us with some suggestions, because there's a few things here that I can point into.
Sure. Eric.
Okay, I'll do my best. Let's see. There are various ways to do your licensing, obviously. What we have as unique as a company is that we have an exceptionally strong grip on the underlying chemistry. And that has been documented in a pile of patents that are good and that we are ever expanding as a thing. Now, from now on, there's a couple of variations. And we could go all the way and design the process, scale the process, build the models of the process. And then in some moment, we are ready to tell people, well, you can buy a copy of this and you're going to pay a license fee. And then there's, of course, multiple models. You can have some upfront payment followed by royalties or only royalties or whatever else. Typical idea of royalties, I guess, is a couple of percentage points of the sales of a plant. But there are also models that are connected to the net profit, a great variety of things. And given the enormous size of our markets, if you just realize that just assume that you could make 100 million tons of cracker feed, which is quite realistic. And you start to do the math and you see that, okay, that is worth so and so much. And then we charge a couple of percentage points. You can see that there is very big number available.
I'm saying this is just one application. If there'll be other applications, then those adds up to your model. And
so that's one model. You could also decide to do, and some other companies that I have seen when I was at Brighton, startup companies, they do an approach where they say, okay, I contribute my chemistry patents, and then somebody else is going to contribute the engineering to that. And then you split the proceeds, and you're probably a little bit quicker to market. There are all possibilities to do.
Right. Okay. And if I can, just in terms of where you're at, I get the patents process, but patents sort of come out of lab scale work. Where are we with the pilot plant and maybe even the demo plant?
Eric, maybe let me try and say something about it, because that is concerned this math. So we, on our journey into commercialization, we basically build a program to address the potential customers that we want to speak to. And at the beginning, we had to prove that the technology is even unique. So that was part of what we have done. And we built this lab and we built this continuous flow technology demonstration unit. And we have shown it out to the world and to our customers. And then at a certain point of time, customers were more interested in evaluating the technology. So we built them math and basically a concept program, which we call customer engagement, which is actually Eric in charge of it. And it's basically built on consecutive steps where we know that every customer that we're dealing with has to make sometimes hundreds of millions of dollars decisions. And so they have to vet the technology very well. We know that we need their resources as well, because if we collaborate with them, we'll get faster to the market. And all of this, we need to find a way to transparent and to show investors what is it we're doing, so the investors will see some confidence. And so basically, the program is built on 3 stages. The first stage, as you can see, is a technology evaluation, because customers, send us some samples anywhere between $50,000 to $200,000 of a deal, few months, that we just give them data, we sell data, and they are, happy with it, and maybe would want to move to a second stage where we're talking about collaborations. And where the collaboration comes in is that we exchange information with such customer where they help us to assess where we are and, give us information that will help us define our next level and build a commercial or semi-commercial unit. But on the other hand, the customer is able to assess the technology to its needs, to their needs, basically. And for the investors, Matt, the customers, or from the investor's perspective, he see that customers are staying with us. They start with a tech evaluation, they move to some kind of a collaboration, which is a more stickier agreement. And so that is how you confirm the confidence. And as for the questions of what's first, we build the other steps of program of or maybe side of the program, which we set simple to complex. So our goal is to start with simple application, and we see applications that we can sell quite immediately, quite rapidly, within 2 years of such. And then as we're moving out from that to a more complex scenario where you have much more complex issues, this is where you're heading to, to the worst of the whole, worst and the heart of the material. And so revenue is very, very important to us, and getting customers used to this very novel new technology is very, very important to us. And so we basically created a tool for the investors to look, and every time that we are doing something good in this and we publish it, the investors doesn't need basically an analyst. They know that we are somewhere in this. If we had another deal, if we have a bigger deal, if we announce something about it, the investors immediately know that we've done something better. Hence, we're just de-risking the company, adding value to the process, and on our journey to commercialization.
Right. And I'm going to bring it back to kind of commercial realities, because I'm trying. I want to really understand it, because I think you're solving a great problem. Mm-hmm. It's got to be commercial for you and your shareholders. It's got to be commercial for your customers too.
Yeah.
Or does it? Because of the problem you're solving for them, are they less concerned?
Because of pretty face.
Right, exactly. But are they as concerned about making money? If you're on a royalty and you're on a net royalty, are they as concerned about making money and therefore impacting, your ability to make money? Or is it they need their kind of green credentials, their recycling credentials, or whatever else that's sort of driving their business imperatives?
So our potential customers, often they're very, very large. They know all the data and the economics models. They know that they're going to face economic concerns in the future, and many of them doesn't want to go into this because pyrolysis, the economics of pyrolysis is very, very, very known. And when we offer a very new path, what is important is that they want to evaluate it before they make those hundreds and millions of dollars decisions. And so, but by the base of it, the fact that we are taking lower energy, the fact that we have high tolerance to contamination, the fact that we don't need so much of hydrogenation, those things adds up. And so they don't need to see the number. They see that in the base core of the way the technology is operating, there is an economic benefit value. And so by the time the customers will decide on one path or the other path, we offer the investors to watch the journey, to see where we are in each stage.
Okay. Again, it's really important for us to sort of understand the sorts of things that could affect your ability to,
Matthew,
capture as much margin as possible.
Matthew, a short question. Were you asked
for sure
for the drivers of this market for our customer?
Yeah, I guess I am, because it's they're under a lot of pressure themselves, and they can either say, look, I'll outsource this, someone else can deal with this one, and we can be at arm's distance from whatever they do, which may mess it up. But I think more and more they're under a lot of pressure to show responsibility for the kind of the whole food chain and make sure that they can claim that they're doing the best thing possible. So where does this product stand in terms of your discussions with them, and say, this is the best solution for you, not just financially, but in terms of your brand and your people's perception of you in the market?
So I think it is fair to say that among peers, our technology has tremendous cost advantages. The overall driver is, of course, is about circular content. If you hear plans for regulation coming about, like 30% in 2030, there is almost a desperate grab for circular feedstocks because they are not that readily available. And that is what the big driving force is. And that is also why it is especially the far upstream guys like the petrochemical houses are knocking on our door, because they are at the beginning of all this and they have to find ways to find that circular feedstock, and preferably also not do it with their existing assets.
Right. So basically, we've got chemicals going around in a loop, and we're hopefully recapturing as much as we possibly can, feeding it back into the system.
You want to increase the amount of material in the world that you can, create new product from and circulate it. That's basically the driver, and regulation enforce that. And any organization in the business right now know what's coming into it. And so they want to make, and in our industry, a process could stay 20, 30 years. So they want to make the best decisions. And if you know that economic model will start driving, because if a large company put a site, let's say, in a certain territory because of regulations, then immediately coming after 2-3 other organizations doing the same, soon enough you have margin reduction because everyone fights for the same feedstock. And if you offer a way out of it to take a cheaper feedstock, you immediately in the interest of those guys, you immediately get their attention.
Right. Okay. And again, conscious of time, you guys got to go. One last question. Next 12 months, what have we got in front of us so far?
So next 12 months is, perfect questions. We offered again this investors to watch and see what we've been doing. So first and foremost, we want to convert more technology evaluators to collaborators, and we see a way to get there. Second, we basically want to advance. We have a continuous flow demonstration, unit technology demonstration. We aim to know how a commercial unit will look like. So we want to build a semi-commercial next year, and we need to finish all of the issues concerning that before the end of the year. And thirdly, we have currently 8 granted and 1 pending, total of 8 patents, US-based patents, and we want to add at least 2 or 3 of them into the market. And so for the investors, I'm offering to follow the story. Every one of those items will add value to the company, will generate some kind of interest. The investors will be able to see that we are basically working towards graduating and making the company, de-risk the company. Every one of those items, and we don't see reasons why we will not complete those goals. And Matt, just to tell you, we have a long history of achieving our goals already. In the last 3 years, we nail our goals to the task. Eric, of course, is responsible for the first one, and the rest of the company is working for, we as a team working on all of them, actually, to say the truth, basically.
Gentlemen, thank you very much for your time today. Appreciate hearing the story. Things are moving quickly. I'm excited to see what you do this year.
Well, thank you very much.